welcome back. You're watching The Money Show. I'm with you, Kavita Thapliyal, and it's time to answer all your portfolio-related queries. And all you have to do is just send across your questions. Let's flash our WhatsApp number on the screen and also the email ID where you can reach out to us and send across your financial details, investment details, and we can help you align all your financial strategies with your financial goals. So let's begin. And I'm joined by Nikhil Kothari, who's the expert on the show today and will be helping you formalize strategies for your portfolio. Hi, Nikhil, welcome to the show. And yes, a lot of queries from across India. Let's begin. And this is a portfolio which is mutual fund heavy from Mr. Raj Yadav. And he's investing 5,000 each in all of these funds. Total investment amount in terms of SIP is almost 45,000. Parag Parikh Flexi Cap, ICICI Large Cap, Motilal Oswal Large and Mid, Franklin India Opportunity, SBI Gold, ICICI Multi Asset, Kotak Mid Cap, Bandhan Small Cap. He's also invested in other funds, is in Lumpsum, I guess. 5 lakhs in ICICI Large, HDFC Balance Advantage, Parag Parikh Flexi Cap, ICICI Multi Asset also. He wants 4 CR in 10 years. And he will invest 30 lakhs in the above funds, and he says that he can take risk. All right, so Mr. Yadav, although it's very good to know that you have done your risk profiling and you can take risk, I think the biggest risk that you've done is being over-diversified. And Nikhil, I'm sure you second with me over here, because diversification, right strategy, under-diversified portfolio and over-diversification leads to having more risk in the portfolio.
That's it. So first thing, few things he has done very, very good is that he has done a long-term SIPs. His goals are long-term and he's continuing SIPs for a reasonable amount of time. But too many funds in the portfolio then leads to over-diversification, because in mutual funds, every fund already have 40, 50 stocks in the portfolio. And now if you have 10 funds in your portfolio, predominantly you bought the whole of market itself, right? So in that case, you are better off buying only one index fund instead of buying so many funds in the portfolio. So I will say that you should not have more than 4 or 5 funds in a portfolio, and that too from different categories, right? So that's the ideal strategy what one should have. Now he can have one small cap, one mid cap. That's good. You can have one flexi cap fund, which is already Parag Parikh Flexi Cap fund, and then he can have one ICICI Large Cap fund. So he already have 4 funds in the portfolio. I don't think so he should add too many funds in the portfolio. If he wants value as a strategy, then the Motilal Oswal BSE Enhanced Value Index is also good. These are broadly 4 or 5 funds what he should have in a portfolio. With regard to multi-asset or a gold, he has already got SBI and ICICI multi-asset fund, which he can also continue in the current context. So I think these are the good funds which he can have in the portfolio, and incrementally whatever money he invests, he should invest in the same funds. He should not add any more funds in the portfolio, because it will lead to extreme over-diversification. Then what will happen is that few funds will outperform, few funds will underperform, and overall his return will in line with index. So I will say that limit your portfolio and to this 6, 7 funds, and then continue your SIPs and lump sum in those funds only. With regard to his corpus that he wants to achieve 4 crores in 10 years, I think this is really very ambitious, because you need to give time. 10 years is a very small period of time, because you don't see compounding happening very fast in 10 years. So I'll rather say that he need to extend his time frame to 15 to 20 years. And if he does that, and if he continues the SIPs, right, he will be able to achieve his corpus more than what he wants to do that.
All right, so that's the recommendation for you. Also, see, 30 lakhs lump sum that he wants to put, what funds would you recommend?
See, he should invest in the same existing funds.
Okay.
He should do. So what I'll say that he can invest in ICICI Large Cap, Parag Parikh Flexi Cap, and some amount in Kotak and Bandhan Small and Mid Cap Fund. What he should do is that he should invest in a staggered manner over the next 6 to 8 months. Okay, and whenever there's a fall in the market, he can switch his money at those times.
All right, so all you have to do is just divide that money in these funds itself, in the existing portfolio that you have made. And but Nikhil, what should be the timing? Because the market is volatile, and 30 lakh is not a small amount. So how should he be phasing this out? Within how many months, or within 1 year's time? What would you recommend?
So normally I'll say 6 to 8 months is a reasonable amount of time for him to stagger his investments, because that will give him the whole time frame. The idea is that he should also be active a little bit in that whenever there's a fall in the market by say 4-5%. And that time you should do some switches also from his debt fund to equity fund. But I think 6 to 8 months is a reasonable time right now with the current context, because last 1 year market has been completely flat. So from a correction perspective, market has already gone through time correction. And now markets are not expensive, markets are fairly valued now.
All right, let's move on. Let's take Mr. Rahul Yadav's question, and he is 35 years old from Indore, MP. And he's invested in Parag Parikh Flexi Cap, SBI SBI Mid Cap, Axis Small Cap. He's doing SIP in all of these funds, and as per market conditions, he also wants to invest 1 lakh rupees lump sum. So what funds would you be recommending for that lump sum amount, and also how are these funds? On the face of it, I think in terms of market cap, he is well diversified. He's got the right category funds as well. I don't know if you want to change Axis Small Cap over there, Nikhil. But having said that, a very important point in his portfolio is that he's taken care of the diversification across market caps.
So if you look at this fund has only got three funds in his portfolio, right? So that's very good because he has 3 different funds from 3 different categories. So it takes care of the broader market, everything. With regard to lump sum investments, I'll say not a good time to invest in mid cap as a lump sum right now. So he can, and because mid cap is not corrected that much as compared to what small cap is corrected or what a time correction what the large cap has or flexi cap has gone through. So I'll say that invest in a flexi cap and a small cap in a staggered manner at the current junction instead of putting lump sum in mid cap. And you should not add any more funds in the portfolio. I think this 3 funds should good take care of his long-term portfolio.
I think with that, we are time up on the show. Thank you so much, Nikhil, for taking your time out and helping our viewers with their portfolio queries. And for all our viewers, before I sign off, I'm going to leave you with our WhatsApp number and email ID where you can send across your questions, and we can do your live financial planning on the show. Thank you so much for watching. Goodbye.